Hello, we want to talk to you about a once in a lifetime opportunity, how you can beat the financial virus in the stock market. As you all know, the best time to enter the market is at extreme lows, and we're certainly at extreme lows now. We've had the highest volatility in the last 30 years. If you actually take a look at this graph over 30 years in the market, we've had 10 major corrections in the market. Dot-com bubble, Twin Towers and Iraq War, subprime mortgages, US debt, and Arab Spring, the China markets in 2015, the US government shutdown, and COVID-19. As you can see from this CBOE volatility index, we are certainly in extreme volatile times. In our experience, when the volatility is high, the share prices are extremely low. In fact, sometimes, and many times, the market is a mirror image of the VIX. So when the VIX is very high, there's a saying in the stock market, when the VIX is high, you buy. How can we add value to you? Well, now's the time for you to get prepared to benefit from the wonderful recovery that will come in the market when it does come. We can help you to remove the middlemen costs associated with buying and selling shares. 2, we can give you access to reliable information that you can trust to make sound business decisions. 3, we can help you find the best value-based companies in the world. And 4, we can also show you how you can get paid to buy your shares in the market. How can we help you remove the middlemen? If you buy shares online and deal directly with the market, you will reduce your traditional transaction costs by about 95%. You will avoid unnecessary middleman costs, and buying and selling shares online is easy, and we can show you how to do this. 2, we can give you access to reliable information. Valueline.com has been around since 1931. It will give you reliable, conservative information that you can trust, and all of the top investors in the world use this source of information. It's a one-page report that's presented every 3 months with a 15-year past record and 5-year future projections of 1,700 of the best businesses in the world. If you want to get Warren Buffett's opinion of Value Line, let's take a quick look what he had to say about Value Line. When he was asked by somebody at his 1995 Berkshire Hathaway AGM, he was asked where could we get reliable information in the market. At this stage, the Berkshire Hathaway fund was only in its infancy, worth $12 billion US.
Kind of falls into place or not. John? Yeah, I think the set of numbers, the one set of numbers in America that are the best quick guide to measuring one business against another are the Value Line numbers. I agree with that. That stuff on the log scale paper going back 15 years, that is the best one-shot description of a lot of big businesses that exists in America. I can't imagine anybody being in the investment business involving common stocks without that thing on the shelf.
So interestingly, this is when Warren Buffett Berkshire Hathaway fund was only worth 12 billion. Today the fund is worth 250 billion. How can we also add value to? Well, we can help you to work with Value Line and to help you find the best value-based companies in the world. Because of coronavirus, prices are extremely low in the market now, and there's now great value to be found in the market. It's very important that you appreciate this. Get yourself ready, get a little bit of education information, open up your online accounts, your trading accounts, and we can help you do this. Put your funds in place and be ready to move when the market bounces, because the recovery will be very quick and very substantial, and you can do very well when the recovery comes. We can also show you how to find and invest in the greatest companies in the world at their best value. Check out valueline.com to find out the source of information. And fourthly, very little people know this, but you can actually get paid to take your shares from the market. You can buy your shares at a significant discount, and we can show you how to do this. As Warren Buffett famously said, sometimes I get paid to buy my shares. Let's take a look at the history of the last 20 years of the S&P 500, which is the Premier League of the US market, or the global market. From 2000 to 2003, the dot-com bubble drop was a total of 51%, and it took 30 months to unfold, at an average rate of 1.7% drop per month. The recovery from 2003 to 2008 was 208% in total and took 5 years to unfold, and the average growth of those 5 years was 3.5% per month. 2008-2009, with the financial crisis, subprime mortgages, the market dropped 58% over an 18-month period at a rate of 3.2% per month drop. And from 2009 to 2020, there was 11-year growth in the market, total growth of 515%, which is a recovery of about, on average, 3.9% per month. So to put into perspective of what's just happened in the market with the coronavirus, we've just seen the market drop 34% in 1 month. Now this is 10 times the rate of the drop in 2008 and 20 times the rate of drop in the dot-com bubble. And so if you want to know how you can benefit from the recovery when it comes, you can reach out and contact either Owen O'Malley or Anna Rodriguez on these two numbers, or send us an email to contact us today to arrange a Zoom call where we can go into a little bit more detail of how we can help you recover from the greatest turnaround that's going to happen in the market whenever this coronavirus issue has finished. Thank you for your time and attention watching this video, and feel free to share this video with other people who are in a position like you to get ready to benefit from the future upside of the market. Bye for now.